Hey traders, good morning, good afternoon, good evening, and welcome to the Pip Grabber Trading Show. My name is Gary Fickard, known to many as the FxBigDog. Glad to have everyone here. It's going to be a great show. Yesterday, if you did not see yesterday's video, you may want to go ahead and check it out. We placed, I think it was 4 trades yesterday, and all 4 of them paid off. In fact, we got into the cat Swiss. We took a short on the cat Swiss. We made a decision after being in 3 pips in profit. Made a decision that it was the wrong decision, and we reversed the trade, took on a buy, and we made profit on the upside. We'll take a look and see how that worked out today, but all our trades are paid off. We're going to go ahead and put some more trades in today. So welcome to the show. Let's go get this show on the road. I'll see you right after this. Alrighty, traders. Hopefully everyone got a cup of coffee right here ready to rock and roll. Let's go ahead and see what the markets are doing. Before we go ahead and get started, you know I like to go ahead and just make sure that everyone is subscribed to this channel, because if this is the first time that you see this show, we do this on a Tuesday, Wednesday, and Thursday at 9:15 every morning Eastern Standard Time. So you want to go ahead and make sure that you are subscribed to the channel, but also make sure that you smash the like button. Now, I will remind you throughout this the session today, because it's very important that we beat the Google algorithm. Now, we've been getting some great likes, but I know we can do better, because we've definitely seen a lot more views on the video, but we're not getting the equal amount of likes, which means that if you're not making profit, right, then we need to make sure that you're getting into these shows, because every time we do a show like this, we place trades, we make profit. So come on, let's go ahead and smash the like button. Let's get this video out there and to go ahead and share the love. Now, while you're down there smashing that like button, I want to go also remind everyone that we do have other things as well that are available to you that you could use to make profit in this market. Now, check it out below. We've got our trade Copier. We made 153% last year with 18,500 pips. Check out our trade Copier details down below. Also, take a look at the trading tool we use called the Pip Grabber Trading Tool. Unique, right? So Pip Grabber Trading Tool, check it out below. It is also available. I will be using the Pip Grabber Trading Tool in this session to actually place a trade, where it helps us to be able to execute a trade and manage a trade for us without us being around the computer, which is fan-damn-tastic. Come on, man. It is tastic, fantastic, tastic. Whatever. All right, so the deal is this. Let's go ahead and take a look and see what's going on with the trades this morning as we dig into the markets. Firstly, very important, it is Wednesday. What's happening Wednesday? We got a bunch of news. All right, we've got the Canadian rate decision. We've got US rate decision. All of that stuff is going to move the market, and it's going to move quickly. Now, also the thing that you also have to realize as well, when we do have rate decisions like this, there may be also widening of spread. We might get a little bit of widening of spread as the news comes out. Now, that's okay, all right? That's okay as long as the market settles down, and we can get out of our trades. But we're going to be in the market today. We're definitely going to trade it. News is important for the market to move in the direction. So now we're going to go ahead and take a look and see what's setting up technically, so we can go ahead and position ourselves for an opportunity. So good morning, everyone. Glad to see everyone in the room right here. We've got a bunch of traders in here. Woo, look at that. We've got a bunch of traders in here. Got a trader right here. Gary, how do I risk? How is your risk management? How much money do you use for each trade? Well, you see, you got to check out the trade Copier down below, right? Now, this session is about placing trades. It's about managing your positions. We don't go into the details about how to manage it, because that's one thing I cannot do. I cannot tell you how to manage your account, but I'm going to tell you how I manage it. What I do is I take what I've got in my trading account, and I use depending, of course, I use about $1,000 for each micro lot. $1,000 for each micro lot. Now, if you use one micro lot for each $1,000 in your trading account, it is considered to be a very aggressive approach. All right. If you want to be really conservative, then go with one micro lot for every $2,000, or one micro lot for every $3,000 you got in your trading account. Depends how aggressive you want to be. Okay. Now, I'm using on this account right here as I go into my trading account, and I'm going to be very transparent about stuff. And I don't think there's too many channels out there that actually go ahead and show you, you know, their trading results. All right. And so I'm going to go ahead and be very, very transparent with what I've got right here. I'm going to show you that in this trading account right here, I have, and I'm going to go ahead and show you the balance so you guys can get a good feel of what's going on right here. So on this balance right here, I have a $57,000 trading account. All right, $57,000 trading account. Now, I originally did have 50,000, so it's grown since since I've started this. But if I go ahead and take $50,000, you'll notice that my entry points right here, I'm entering. Take a look over here. I'm entering 0.2 lot sizes. All right, 0.2 lot sizes. So the way I'm managing my risk right now is I'm taking my equity and I'm taking 40% of the equity. So take $50,000 because that's what I originally started off with. Times that by 40%, you'll get $20,000. Then take one microlot for every $1,000 in my account. So which means that if I've got $20,000, I would be trading 20 microlots. That's how I'm managing my portfolio. Now, also keep in mind that we're only trading a few trades a day on this, right? We're placing a few trades a day, maybe only 3 days in the week we're placing trades. So only 3 days a week we're placing trades, and we're not placing all 5 the currency pairs that we're trading. We're only trading maybe 3 or 4 pairs at a time. So if that's the case, all right, and I'm trading with 40% of my equity, and I'm trading 1 microlot for every $1,000 that I have in my trading account, then that means I'm trading it very conservatively. Now, what type of returns am I getting? Because I'm sure that's the next question that you're looking at, right? So let's take a look over here as I go ahead and take a look at the returns. How am I doing with this type of trading approach? Well, let's take a look right here. I'm going to go ahead and refresh. This is the account. Is this account or no? Let's see here. No, this is not the account. Hold on, let me get to the account. Let's see here. Come on, let's get you. Why is this not refreshing? There we go. That's better. This doesn't even look like the account. So let me just log in here. I'll have to tell you, I can only tell you by the size of the account. I've got multiple trading accounts here, just so that you know. All right, so there it is. Okay, so 57,000 right here. All right, this is the account right here. So this was updated 10 minutes ago. So far this month, I'm up 2.545%. Now remember, I'm trading with a very conservative approach because I'm only trading with 40% of the capital. And so this month, I'm up at 2.45%. Keeping in mind that I'm only trading, okay, I'm only trading with a portion of my account. And so you take a look over here, 2.5%. If we go to the last couple of months that we've been doing this, look at the type of returns we're getting. We're getting very steady returns. Yeah, we made what 2.9%, 2.69. Yeah, we made 5.27. Yeah, we made 6.26. Yeah, we lost 2.6 again. We've made 4.6%. We made 8%. We made 7.4. We made 4.3. So this account has been managed conservatively. So I want to make sure that you understand then that this account is being managed conservatively throughout 2021 as well as now 2020. So I'm only really trying to chase after about a 2 to 5% return on this account. And that's why I've managed it the way I have, to keep the drawdowns low, but at the same time keep steady returns coming in. So that's how I've managed it. Now, I don't know how big your account is. I don't know how you want to manage it. I don't know if it's a risk appetite or a very low conservative appetite. I don't know. But whatever that is, you're going to have to make that decision on that. All right? All right, traders. Well, that's it from the risk management point of view. Let's talk about trade opportunities this morning. So if I go into the price of oil and I look at the chart right now, we do see here on the daily time frame that we've had a nice little spike to the upside, and we said that this could be just maybe a retracement move before price moves back down south. Now we did go down to the 15-minute time frame and we broke it down yesterday, and we notice right here we have a wave 1, wave 2, wave 3, wave 4, and price did move down here to 81. Now it didn't get to my 1.27 right here, and price did go ahead and take out that high. So because we did not get down to the 1.27, I'm expecting that this is a failed fifth wave, or maybe we just say, well, it's a fifth wave, it just didn't quite hit that 127, because once price takes out this wave 2 right here, then this whole structure changes. So what I'm going to do is I'm going to go to the 1 hour time frame now, and I'm going to look at the 1 hour time frame, and I'm going to break the 1 hour time frame down. I'm going to look at this and say, okay, so with price taking out that wave 2, I'm going to assume, all right, that this is a larger swing from all the way down here, and that this is just an interruption of this trend right here. It's just an interruption, which means this downward trend line that took place right here, all right, the market just went ahead and broke through that, but it never took out the high up here at the top. So remember, traders, I'm going to look at this as a wave 1, 2, 3, 4, and 5. I'm still going to consider that as a wave 5, because as soon as wave 2 gets taken out right here, then I have to assume that this is now my big wave 1, and now this is my big wave 2, because I'm still expecting price on oil to drop back down to $61 a barrel, okay? And the only way it can get there if the market's going to wave like it's doing right now. It's going to wave back down south. So I'm expecting oil price to weaken. Now, that's one. All right, let's go to number 2. Let's take a look at price of the dollar. Okay, and dollars bounced off the support right here. Right, bounce off the support. It's going back up right here. I think it's time to clean up charts right here. Yeah, I think it's definitely time. Let's go ahead and clean up some charts right here. Do some housekeeping here. I'm even going to take out this rising wedge we had. Yeah, just clean up that as well. Just do a nice little housekeep here. Okay, good. All right, now I'm going to go to the 4 hour time frame, get a little more data in here. In fact, let's go to the daily and let's get crazy. All right, there we go. All right, so if I look at the daily time frame right here, one thing I do pick up here that we have, and I'm going to kill this one too, is we have price moving back and forth between support and resistance. Here's the support right here, all right, and there's the resistance up here at the top. So we got support and resistance bouncing back and forth right here, okay, and we got support right here. So there is our, come on, work with me, baby. All right, so here we have resistance up at the top. We've got support down the bottom. Now I'm going to kill this trend line as well. Again, I'm going to do some serious housekeeping here. Okay, and I'm going to clean up the fibs as well over here. We're going to get back to that in a minute. All right, so there we go. So we got resistance, we got support right here. We've got a nice clean chart. If I bring in the data from the left here, what do we see? We see price, and let's mark this off. We see this as a wave 1, wave 2, wave 3, and so this must be a wave 4, and we're looking for price to go to wave 5, which is right here. Now, does price hit the wave 5? Yes, it does. So if you look over here, there is the wave 5 right here. So price hits the wave 5. Now, those that follow me in my hybrid trading room and follow me here through YouTube, and by the way, make sure you subscribe to 2 channels, FxBigDog, and subscribe to the Traders Network Club. Right, those are 2 YouTube channels you've got to go ahead and subscribe to. Now, if the market's going to complete this 5-wave structure, right? If we're going to complete a 5-wave structure, then what do we expect the market to do once the 5th wave has been completed? What is the target that price moves to once we complete a 5th wave? Well, if you did not know, it is the 4th wave. The market traces after the 4th wave, and then we start thinking about buying off that 4th wave test. So let's go take a look. So here we have the 4th wave right here. Okay, so there's the 5th wave, here's the 4th wave right here, and here is price working towards that low. Now, it hasn't got there yet, but I understand we do have support here, and we do have support here, but the market's come just shy of taking out that 4th wave. So which means that there is still this possibility that price is showing that we have downward swings, and this right here is just a zigzag back down south. So which means that I'm expecting price to do this, and this is called a zigzag in a retracement move. So we're expecting maybe dollar to start selling off to go further down south right here. So let's take a look and see how this plays out. I'm going to zoom in a little bit closer up. Now what I'm going to do is I'm going to go ahead and actually pay attention to some trend lines going across right here. Okay, why is that the case? Why am I looking for trend lines? In fact, let's use a channel line. Well, I'm using this because as long as price stays above this level right here, we're still in what we call a bearish flag. This is a bear flag right here. And the bear flag recommends that price is going to break below this bear flag and head further down south. So right now, I'm in this bear flag. Okay? So as long as we're in this bear flag, all right, we're going to still remain bullish slightly until we get a breakout. So dollar's not giving us the signs quite yet to say that we're going to go ahead and sell off. But I'm still anticipating that price is going to move down south. We're going to see a further move on the dollar. Now, that's given us a long-term aspect of what's going on. That gives us sort of an idea of what's happening here at the moment right now with the dollar. And so let's go back to the news and take a look at the news out today. So we got news out today. This is Wednesday. We got Canadian news at 10 o'clock. They're expecting to keep the rates unchanged. Obviously, everything is going to come back down to the verbiage, right? Whatever has been said in the statement and the press conference is really going to move the market. The decision to keep the rates unchanged, I think that's been priced in already. All right, I think we can all agree on that. So the decision to keep the rates unchanged is not going to be the big deciding factor on how the market moves, but rather the statement and the press conference will move the market. The same thing goes for the US right here. We already know that the Fed's already said that they're going to start raising rates in March. Now, I know that President Biden is under a lot of pressure by the press asking questions about inflation. There's not too much that President Biden can do to control inflation. That's the central bank's issue. Although he can certainly stop spending a lot of money. That would help. But the thing is this, what we've got to do here is we've got to take a look and see, all right, if it's the statement that's going to move the market and if it's a press conference going to move the market, what does the technicals tell us? Now, we do trade Canadian crosses, and we do trade US crosses. In fact, we trade the Euro US dollar, we trade US dollar CAD. And then we also trade the New Zealand CAD, the Aussie CAD, and we trade the Canadian Swiss franc. So based on today's news, a lot of the pairs that we trade are actually going to be affected by the market's movement today. So let's go take a look and see what's going on here. I'm going to pop open a chart. Let's go take a look at our pairs that we're going to go ahead and trade this morning. We're going to start off with the Aussie CAD right here. And I'm purely going to be making a decision based on technical analysis, not on anything else but technical analysis. Now, let's assume that the news coming out today is the rate's unchanged. They're not going to change the rate. The statement comes out saying, yes, we are going to go ahead and look to increase rates in the future, whatever month they speak about the rate decision. But let's assume that that's going to be the call today. So what could the markets do? Would it be a bullish move or a bearish move? Well, normally when they raise the rates, it normally increases the currency's value. So when we see a rate increase, all right, anytime they hike the rates, the actual currency increases. Now, over the last few rate decisions, when they've kept the rates unchanged, it actually we've seen a drop in the actual currency. And normally that means that normally we do see a bullish move as well when they keep the rates unchanged, because there's normally a discussion about what they're doing about that particular inflation issue. So let's do this. I'm going to go ahead and assume that the Aussie CAD is going to come out, rate decision unchanged, and it's going to follow suit to what we've seen before, and we're going to see a weaker CAD. Now, I could be wrong, and that's why we're going to use a cost averaging trading approach, but also more importantly, I'm going to really rely on my technicals. Now, my technicals at this point in time right here, and I'm going to move down to a 1 hour time frame. This is what my 1 hour time frame tells me right here. My 1 hour time frame says that we have price in a down AB boundary. All right, so we have a wave 1, wave 2, wave 3, wave 4, and we've gone to wave 5 right here. So which means that we're looking for price to go to this fourth wave. And if we look over here, we do see the market somewhat wedged up here. Okay, so we do have the market somewhat wedged up here. And so my expected breakout on this would be bullish towards our fourth wave. Remember, when we complete a fifth wave, looking for price to move here. So I would say that I'm actually more encouraged to want to buy Aussie CAD than I am to sell. Now, if the market spikes down, based on the news at 10 o'clock, I must take a look and see how far can the market move down. So if I go over here, looks like we could move about 21 pips or so, and that's okay. Maybe it'll spike through here, go to 25 pips, but that's okay, and then rally up. We've got some more upside potential, a lot more upside potential right here. So I'm going to stick with my game plan, and my game plan is that based on my technicals, I'm still expecting a rally in Aussie CAD. So I'm going to go to my trading account. I'm going to use the Pip Grabber Trading Tool right here, and I'm going to go ahead and buy Aussie CAD right here. Boom, done. All right. Now you might be looking at, let's say traders, if you're looking at the chart right now, or you're looking at that 1 15-minute candle right now, and you go, Gary, are you crazy? That candle is so bearish right now. Why are you buying against that bearish candle? Well, traders, remember something. Don't trade by the heart, but trade by the chart. Now, if you're looking at that one candle and you're making a decision just on that one candle, that's trading by the heart and not the chart, because you shouldn't look at just one candle. You should look at the overall picture. And that's what we're doing right here. We're looking at the overall picture on the chart. So I'm long. And do I mind? Am I concerned if the market dips down further? No, I'm not concerned. That's because I'm using a cost averaging trading approach. Okay. Now, if it spikes down and spikes back up again, perfect. Pick up on the second trade and rally back up again. No problemo. I can handle that. Okay. Now let's go take a look at another trade. Now we could actually go ahead and do a hedge position. If you're feeling like, oh man, I'm a little worried about this, I should place maybe a hedge position. Well, you can go ahead and trade like the Aussie CAD bullish and take the New Zealand CAD and sell it and sell New Zealand CAD. You can hedge your position if you choose to, and that'll be able to subsidize the possibility of the market maybe dipping instead of rallying, and then go ahead and subsidize or hedge it on another trade. So let's take a look at the New Zealand CAD. Now, I'm saying you could do that. I'm not saying I'm going to do that, all right? I'm not saying I'm going to do that. But let's go take a look right here. All right, so we got the 1 hour right here. Let me pop up the 4 hour right here. Are you kidding me? Are you kidding me? Come on, man. Take a look right here. We are at a 1.618 down here, right here. This larger swing right there. See this? Here it is. This is our wave 1 right here. This is our wave 2. Price has gone all the way down to this level right here. There's got to be a bounce there off that level of support right here. There has to be. Listen here, it's a no-brainer for me. I'm going to go ahead and buy New Zealand CAD. Look, if I look at my inside swings, look at this. Wave 1, 2, 3, 4, and 5 right here at the 1.27. It makes sense for us to want to buy. Okay, if the market's going to push lower, it can't push lower anymore. Okay, it can't go too far down before it goes and closes out with profit. So I'm going to go ahead and buy New Zealand CAD. Come on, man. That is a no-brainer. Now, I said we could hedge it, but the technicals don't say we should. I'm just not going to do it. I'm just not going to do it. Let's go ahead and see what else we got here. Now, what I'm going to do is here, I'm going to go into a pair that we haven't traded. I think we missed the US dollar. I believe we missed the US dollar CAD yesterday. Did we? No, it wasn't. I think it was the euro actually. All right, let's take a look and see. Let's go to US dollar CAD first. All right, so it doesn't matter how you break this down, but this is what's important right here. Traders, notice that we took out that wave 2 right here. So actually my technicals at this point in time right now, if I look at my technicals, it tells me that I'm going to see a push to the upside. I'm going to see a rally in a US dollar CAD right here. That's interesting. So let me go ahead and compress this a little more. So overall on US dollar CAD, we see US dollar CAD heading south overall. I got to drink my tea quickly. So we see US dollar CAD heading south. The deal here is, what does the structure look like down below as I go closer to this last bit of movement that we've seen in the market? So here we go. This is wave 1, wave 2. Then we had an extension, so I called this is the inside wave. So this was the inside wave 1, 2, 3, and this is 4 right here. But it took out that high. So this inside structure right here has been broken. Price has gone ahead and taken out that high. So I'm going to kill that because there's got to be an alternative. I've got to be careful on what I'm going to do here. I'm going to clean up the charts a little bit right here. And so I'm going to look at this and I'm going to go, okay, wait a minute. If I bring this down here, that's not going to show me anything. Nope, that's not going to help either. Oh, okay. So what I'm going to do is here. So this is the inside swing right here. So this is wave 1, wave 2 up here, and then it hit the 1.6 right. I'm going to go ahead and put there. So that's what it is. It's just a wave. And let's mark this off. Let's go ahead and mark this off as wave 1, 2, 3 right here. Here's 4. So now we're expecting price to move down to wave 5. All right, so this is the thing right here. I'm going to just shift it down here. That's where my wave 5 is going to be down here. Okay, but hold on a second here. This is a 4-hour time frame. So what we want to do is we want to go ahead and assess what's going on here in the short term. So let's drop this down to 15-minute. Now check this out. There's the 4th wave high right here at the top. Let's go ahead and break this down from the high there to the low down here. Now take a look right here. What do we see? We see price in the 1.618, which means that we've got a new swing right here. Okay? In fact, I even see an inside swing that we could pay attention to in the meantime. No, that didn't hit the 1.618. Nope. So I'm going to go all the way down here. All right. So we got this set up right here. So now with the US dollar CAD, we could see price doing this. So this is just wave 1, wave 2, wave 3 right here. We're in wave 4. So there might not be enough movement to the upside right here, and we don't have a lot of movement to the downside right here. We're really in the middle of the road. I'd like to see price either up here at the top or price down here at the bottom to make a better decision. All right. This is what I call the market in the middle of the road. And what happens when you stand in the middle of the road and there's just traffic coming through? You're going to get run over, right? So we don't want to be chickens or a deer in the headlights. And so what we're going to do is we're going to go ahead and stand aside on this particular setup right here. I'm going to stand aside. There's too much questions about what the market's going to do at this level right here. It can go up, it can go down. I know that is always the case, but in this case right here, we want to trade at resistance or we want to trade at support. Neither of those, and nor is that B low right here or that third wave low something confirming a directional bias. So I'm going to go move over to the euro. So moving away from that US dollar CAD position. Let's take a look here. So this is, let's go to the 4 hour on this. So here we have a large wave 1, we have a wave 2, price goes down. So this is a wave 3 down here. So we're looking for that final move down south. Looks like we're going to have to do a lot of housekeeping on this chart right here. Damn. All right, let's do this. Let's clean up the chart a little bit right here. And the one thing that we can certainly keep on the chart is, remember traders, keep it simple, especially in the beginning. All right, keep it simple. I know we're always going to add on some more information, but try and keep the charts as simple as possible. And if things really get confusing, clean up. Just go ahead and clean it up, okay? And so here, if I do this, it gives me a little more clarity of what's going on. Doesn't tell me I can place a trade yet, but this is the clarity I'm seeing. See, the market came inside this range and is bouncing back and forth between resistance and support. And so we are looking for price to come back down to support right here, because the last time it tested the range top means that we're now going to go down to the bottom of the range. So we have the top of the range, we have the bottom of the range. Price came last off the top here, so we're now expecting price to come down to the bottom. But now the inside swings will determine how much the market's going to move down. Now, if this is a third wave right here, then clearly traders, we're chasing after our fifth wave, which is way down here. So we're expecting the euro to drop back down to this level right here, which is my 2.7. Okay? So I'm going to go ahead and mark that off. So I do have a long-term target right here. Let me go ahead and pull this up here. So here we have wave 1, wave 3. Okay. All right, so this helps a little. This is a 4 hour time frame, which is important. Okay. And so we do have now, although we anticipate price moving down to the bottom of the range, we do have a hint here. 1, 2, 3, 4, and here at the 1.27, we got support right here. So I'm going to possibly expect the price of the euro to rally against the dollar and get stronger. We're chasing after that fourth wave. Remember, we completed the fifth wave right here. That's my fourth wave target. Now I'm going to put this in. So we've got this in as record. And I'm going to put this right here. There it is there. I'm going to mark off. I'm going to mark this off as, here it is, fourth wave target. Okay. So I'm going to mark it off as a fourth wave target right here. So that way I know that we're looking for a rally. Now, let's say price drops back down. We get a strong dollar and price drops back down. This is my next level right here that I see support, right here at the 1.27. 1.6. So if we have an extended third wave, which goes down here, how far can the market drop? The market could drop about 42 pips. So there's a good chance that I might pick up maybe 1 or 2 extra positions. But at the moment right now, looking at the setup right here, I'm very keen of buying Euro US dollar right here and looking for price to go up to my fourth wave just because of technical analysis. Forget about the news. Okay? I'm just purely trading this on technical analysis. So I'm going to go ahead and do this. I'm going to buy Euro US dollar right here. And I'm going to look to add on. Remember, traders, just so we're clear, okay? Just so we're clear, I'm not only going ahead and buying and selling on these particular currency pairs, but I'm using what we call a cost averaging trading approach, which means I'm entering on multiple positions. And that's why it's so important for you to use good equity management on your positions, because you're adding onto multiple trades, all right? At least you're adding multiple trades onto your trade. So because we're doing that, we got to make sure. And I want to be clear with you. I'm willing to go 20 trades deep if it takes that much in order for me to get back to my break even or into profit again. Because remember, the reason why I go into cost averaging is because if I'm wrong, okay, if I'm wrong, I want a way out. And the only way I can get out is if I go ahead and stay with the market and keep my my break-even price as close to the market as possible so that I can get out on the correction move. Because if I'm wrong, I'm going to get out on the correction move. All right. So what I'm saying is this: if I pick the trend wrong here and the market goes against me, my cost averaging is going to help me to get out of that position. Now, there is definitely other ways to use cost averaging where you don't have to go in at intervals, but you can go in at certain levels in the market and use that as a cost averaging. And that's something I do also with my managed accounts as well, that I do have certain ways that I do approach the market differently. But in this case right now, this is what we're doing in this strategy, okay? So I want to make sure that everyone's clear on that we don't get any surprises down the line. Some traders go, well, big dog, I'm 20 positions in and I had to stop trading because I didn't have any equity. Well, hopefully I'm giving you guys a little bit more clarity on what's going on here so you don't get caught up in that, okay? All right, I think the last thing we have here is Swiss. Let's take a look at the Swiss. CAD Swiss right here. Now, remember yesterday we picked up a sell on the trade, and then we reversed it, and we went in to buy, and we made some good money. This is yesterday. Yesterday we were selling, and I said, you know what? I'm going to switch it out. Excuse me. I'm going to switch it out, and I'm going to actually go ahead and buy because we had this wave 1, 2, 3, and I said that there wasn't enough profit going down that we're going to pick up at 20 pips, and that I would feel more comfortable going in with a buy. And to be honest with you, even the sell would have made money, even if it didn't make money going down here, but it certainly would have been if it picked up some more positions here and then dropped back down here. So whether you were in a sell or a buy yesterday, you would have made money on the Swiss, the CAD Swiss. But we chose to switch it out, and we made a profit on the upside. We took profit on that, and boom, we just had the news come out. And by the way, I was holding on a little bit longer just so we can get the news. Take a look over here. Let's go to our positions. And here is the news. I wanted to hold on a little bit longer. Here's the news. And so far, it looks like we profited on the Aussie CAD. So we're out of the Aussie CAD. We took profit on that. In fact, we've took profit on the New Zealand CAD. Were we in the New Zealand CAD? Well, let's take a look. I think we're in the New Zealand CAD too. Let's go take a look at our trades right here. And this is it right here on the history. And so, did we have a sell? Did we have a sell? Hang on, let me change the history right here. There it is there. Aussie CAD and New Zealand CAD, both of them paid out. We took our profit on both those positions right here. I think we took an extra pips on that because of the spike. So we did take profit on that. And I believe we just went ahead and closed out on the... Let's see here. I don't think I can actually place another trade. So we still got the Euro US dollar right here. Obviously, that's not going to be affected by Canadian news. So the trades that we did go ahead and place has paid off. And it looks like it's just the two right here. And that is on the... let me go ahead and pull up the date here. Let's take the today's date. So that way it simplifies. There we go. All right. So those are the two trades that we went ahead and entered, both on the New Zealand CAD, Aussie CAD, and we went ahead and bought on both of them, and they've gone ahead and paid out. The only one that's still active right now is going to be the Euro US dollar right here. We'll see how that plays out. That's going to be at 2 o'clock this afternoon when the news comes out. Hopefully we get profit, we get out of that trade before the news comes out. But there it is, my friends. We are in profit on those trades. I think I'm going to leave it at that. Let's see how the Euro US dollar does by the end of the today. And we'll see everyone back again tomorrow. Hopefully you guys profit on these trades. And it was pretty exciting. I was holding on, waiting for that 10 o'clock time just to get the news. I've got another session I've got to get into right now, so I've got to run. But hopefully you guys profit on that trade. It was exciting. It was good. It was great. We picked up the right decision. We relied everything on our technical analysis. Even though the fundamentals could have pushed the market further down, we stuck to our guns and we stuck to our technical analysis and we made profit on that trade. Traders, that is awesome. Hopefully you guys made profit. If you've made profit, type in the room right here. Type in the chat that if you made profit on these trades. We'll see everyone again on, hang on, what's today? Wednesday? Thursday. We'll see everyone again tomorrow for another session before the end of the week. This is FxBigDog signing off.